All happening in real time here. What are you seeing?
It is. So, fixed income revenue better at Citi. I think the disappointment is going to be that the branded card revenue fell 3%. That's been a key thing that we've been watching. We're going to want to hear more about what's going on there. Some of the misses in recent quarters have been due to the fact that they've been growing the teaser balances and the higher cost of funding. They did have the Hilton portfolio sale. I guess they're attributing that growth in non-interest earning balances was more than offset by the Hilton portfolio sale in partnership terms. So we are going to what is the core underlying growth there? So we don't have that in front of me yet.
And we are seeing Citi shares trading up about 1.65%, up about $1 right now. Was going to check on Wells Fargo as well to see what their shares are doing, and they are also up about 1.46%. So continuing a trend of stocks going up on bank earnings this morning.
What's interesting, Alison, is that, the JP Morgan read-through was a back to basics, right? Like they missed on FIC, they missed on investment banking, but their core loan was pretty good. They put aside less money for any kind of losses. Their delinquencies even, I think, were down a little bit. But Citi, is this going to be a different conversation with Citi? Like, are we going to see really idiosyncratic factors be playing out for these banks?
Well, I think, keep in mind the loan mix, right? Yeah. So I think where JP Morgan, and broadly growing across their portfolio, but commercial real estate outperforming the market, C&I outperforming the market, and consumer growth across those categories. With Citigroup, again, I haven't seen the overall loan growth. Yeah, I think, the focus on card, again, it's their revenue, and the fact that they're actually growing these non-interest earning balances is hurting their revenue, as I said. The trading results for JP Morgan was actually a little worse on FIC, better on equities. We're seeing the reverse at Citigroup, so we'll want to hear more about that. But a lot of times that just can be due, again, just to overall mix and just slight differences in the quarter.
Yeah, it is interesting. I mean, we think back even over the last couple of years, FIC has been that element that has been a variable, certainly, for a lot of these bulge bracket banks, Alison.
And the other thing I'll point out on Citigroup, a big positive is the cost ratio. They are delivering on that. They had, sort of coming in ahead of their guidance in the first half. And then, in September at a investor presentation, they sort of updated some guidance from Investor Day, giving sort of a clear path forward on costs, and they're delivering on that this quarter. And so I think that's a key positive for the company.